Gold is rising to a historic milestone, and Donald Trump made a bold promise. But behind that headline is something far more explosive. Trump's hinted $20 trillion liquidity pumping plan. Is it real? Is it mathematically possible? And if it is, even partially, what will it do to gold, inflation, and the Federal Reserve? Let's break it down. A $20 trillion liquidity wave is not direct government spending. It includes Fed money creation, Treasury guarantees, emergency lending facilities, repo operations, sovereign partnerships, regulatory loosening. For context, the entire pandemic, QE was $4.5 trillion. Trump's hinted number, $20 trillion, is 4x larger. But here's the truth. A literal $20 trillion flood is almost impossible. What is likely? A multi-trillion-dollar easing cycle between 4T and 7T, with Trump calling it 20T for political impact. When liquidity floods the system, real interest rates fall, the dollar weakens, inflation expectations rise, asset bubbles grow, and gold explodes. Gold is already signaling weakening monetary credibility, surging deficits, global de-dollarization, anticipation of aggressive easing. Under Trump-style liquidity expansion, gold becomes the strongest asset in the world. Trump's agenda includes every single one of these is inflationary. Together, they create an inflation super cocktail. High inflation becomes structural, not temporary. Here's the paradox. Trump wants rate cuts, liquidity spending tax cuts, all while inflation is rising. So how can the Fed cut? Simple. Political pressure, plus new justification frameworks. This means the Fed could cut rates even with CPI rising, and that's one of the most bullish environments for gold, and one of the worst for the US dollar. Short term? Yes. Liquidity floods. Stocks explode upward. Lower rates, cheap leverage, stimulus, optimism, tax cuts, higher earnings. But medium term? Inflation creeps higher. Bond markets destabilize. The dollar weakens. Cost pressures rise. Trump may keep stocks at record highs, but the bill will come later. Here's the final takeaway. A multi-trillion liquidity wave, even if it's not truly 20T, creates the perfect storm for gold. Gold becomes the hedge against inflation, political instability, currency debasement, monetary distortion. The fireworks may look spectacular today, but the long-term consequences will reshape the financial system for a generation.
Magi Metals.